Hey, good morning everybody, this is Henry. It is 4:07 a.m. the 20th of August 2009. In about 23 minutes we're going to get UK retail sales number, the month over month number coming out. It is expected that the forecast for this number is to be at 0.3%, and the previous release was 1.2%. So what we're going to be looking for is a minimum deviation of 0.6%. So if we get a better than expected number around the area of 0.9% or better, we will be looking to buy the pound dollar. And if the number comes out around the negative 0.3 or worse, then what we'll do is we'll be looking to sell the pound dollar. Just an interesting observation that during the last 12 releases we got actually 10 better than expected release. So just based on that simple statistic, we could be getting a better than expected release this time. Now let's look at some pre-news market condition. The pound yen has been trading. If we would look at the 15 minutes chart, we're seeing that the pound yen started this Asian session around the 155.45. It went as high as about 156.61, about 116 pips, and right now it has kept its gain, about 87 pips of gain at 156.32. So obviously we're seeing some sterling strength here, and let's look at the pound dollar. And the pound dollar actually, it's showing a sort of a ranged trading type of thing, but still is gaining from the opening session in Asia. As we can see, it opened at 65.27, 165.27, and right now we're seeing that the sterling has gained about 42 pips from the opening of Asia. It's at the high end of the range today. So I'm probably going to be more interested in trading the pound yen because that's my favorite pair. And what I'm going to do is I'm going to be looking at the 1 hour chart and also at the 4 hour chart. On the 1 hour chart, obviously I have marked these areas 156.50, 157.50 as possible areas to get out. And what I'm gonna do is I'm gonna redraw some fib lines here and see if we can put some ranges here. Now obviously I like to look at the recent range down. That will be my fib line, and I'm gonna remove these yellow lines so they don't confuse anybody. Alright, and we're gonna be looking at this before the actual news. We still got 20 minutes. So we draw a fib line, and now we have all the retracement there. And now what I'm going to do is I'm going to draw another fib line also, but going to the range up to today. So what we can see, obviously we have some intersecting around this area. Actually most of all the fib lines are intersecting, the major ones at least. So those are the ones that if I have one that matches with the congestion, such as right here around the 155.50s, and obviously with some resistance around this area, and the top of the range of course is an important part for us to be marking those. So I'm gonna go ahead and delete the fib line so they no longer look too much alright, fib lines are gone, but we do have some strong support area around the 156. Well, it's right behind the 63 area, 52. So if we see a break above the 63 area, probably we'll see 157.50 on a better than expected number. On a worse than expected number, first line of defense 155.52, second line of defense around the next support area, which will be the 154.89 area. I'm gonna go ahead and put it, which also matches with my daily limit levels. I'm not gonna go into the daily limit levels, but it just tells you that this will be a statistical area here. And then of course the low of the day, which is about the 153.64, and obviously this area, the last daily limit level, is also a pretty good area, I would say. So those are the levels that I can clearly see with this trade. And in about 17 minutes, when the news is released, we'll see what we're gonna do. Now, this optimism in the market, especially for the sterling, has been going on since the beginning of early New York session yesterday, and so far we're seeing that same optimism still maintained strong in the market. So just know that there's support for sterling. Pre-news, we're seeing pre-news sentiment, and if you read my weekly outlook, I have predicted this sentiment about a week ago for the sterling to be going up today. And it is not guessing or anything. It's just basically seeing what took place before, and the same reason basically exists for the same kind of condition to happen again. And lo and behold, it took place again. And if I wasn't so busy planning on my vacation, I would have jumped in on a buy trade, but I did not take advantage of this. But I hope if you're reading my weekly outlook, that you would have taken advantage of it already. But anyways, we still got 15 minutes. We'll trade this number live, and hopefully we can all pick out some pips from here. Okay, we're getting close to the release, so I'm gonna turn on the mic now. So stand by. About a minute now, so.
UK economic data should be out in just a few seconds. We will start with the public sector net cash requirement for July. It's expected at minus £5.6 billion, and then retail sales and M4 money supply figures will follow. Positive £0.2 billion. It's worse than expected. Again, plus £0.2 billion for the public sector net cash requirement. M4 money supply figures up 1% in the month-on-month and up 13.6% in the year-on-year. For retail sales, 0.4% in the month-on-month, in line with expectations, and 3.3% in the year-on-year, above expectations. There are some back-month revisions to retail sales. The prior month-on-month revised upwards to 1.3%. The prior year-on-year revised upwards to 3.1%. But coming back to the UK fiscal situation, that's the first positive reading in the month of July since 1996 for the public sector net cash requirement.
Okay, we get an overall in line as expectation, maybe just slightly positive. So we're gonna go ahead and call a no trade on this one. There's no point to be jumping the market. There's no visible market reaction.
Seeing comments from the gross mortgage lenders.
No visible momentum in the market. We're actually seeing some reverse reaction right now on the pound yen and pound dollar. So definitely not a good time to trade. Let me just take this moment and go through a few things. Right now what we're seeing is obvious taking profit. We see the market coming out with a little bit better than expected release. Actually we were looking for 0.3, but with Trader News their consensus is actually 0.4. So not all the news agencies have the same expectation or the same consensus. And once we get this number, because it's not a much better than expected number, whatever momentum we have prior to the news, now we're seeing profit taken. So traders, investors that started to price in this retail sales are now taking their profits off the table, because the number is not better than expected and there's no reason to stay in the trade. So now we're seeing some reverse reaction, and judging by the way that the market is, I have to say that maybe it is a possibility that we could see the sterling go back up and retest, especially with the sterling yen, retest the 157 handle, but it will be taking a chance here. So without having any good reason to jumping on a trade, there's no market cycle time for us to get in. There's no fundamental news to support this. There is a sentiment, but with the news coming out, it's sort of messing the sentiment up. There's no point to be taking a trade at this moment. Maybe there would be a chance to getting on a trade around maybe the next market cycle time, but right now it's just no reason. So we're gonna go ahead and call this one a no trade, and if I do see another signal, another possibility to jump in, I'll be back and I'll send the signal. Alright, thank you very much everybody.